Our next guest has gotten more constructive on the markets after the S&P has confirmed its breakout above 4,155. Join us now with a closer look at technicals is Katie Stockton, Fairlead Strategies founder and managing partner and a CNBC contributor. That I've been waiting for this for you because I put a lot of stock and faith in what you say, Katie. But one of my criticisms of technical analysis is that by definition, it seems to be kind of trend following. So now, because the markets have probably performed better than the charts were indicating, suddenly it's self-fulfilling. The charts themselves, because they've gone up, they look better now and are maybe indicating further gains, but you weren't necessarily when you could have bought the most attractive time to buy, the charts didn't tell you to buy. So what good is it?
We were actually buyers in October, so to be clear, it is a matter of trend following, right? That we're following momentum. We want to make sure that we're capturing major shifts. The difference, of course, with this rally has just been the breadth, right? So if you're not invested in the mega caps, you don't feel like you've had a very good year this year. But the waiting, it requires a lot of patience at times, and unfortunately sometimes the breakouts do come from levels at which you don't want to wait for. But we always look for that confirmation because that gives us the confidence that there's some sustainability, and even more importantly in this environment, that some breadth will kick in. If you saw on Friday, the breadth, as Cameron was saying, was actually quite good. It was something like 6-to-1 up to down volume, and that marks a shift. If we saw another week or so of that, we're going to get a pretty big breakout in the advanced decline line. So
the narrowness of the advance had been one of the things that kept you skeptical.
It was, yeah. Breadth was downtrending. Actually, still really is technically.
So then why? Then maybe this is still a head fake.
No, but what's really interesting, so we have the breakout above this cloud-based resistance level 4155, and the day after that happened, we got the confirmation. The percentage of S&P 500 stocks above their 50-day moving averages reached only 30%. So it went down, showing how breadth contracted, and that sets us up for upside, right? So it was an oversold reading in market breadth. Very rare to see that associated with a breakout in price terms, but we'll take it. And we expect now Russell 2000, S&P 500 equal weight to actually kick in. But I have to be clear on the time horizon because this is a breakout that has intermediate term implications, not necessarily long term. And by that I mean it's 3-4 months maybe, and I think the interest rate environment would be somewhat conducive to that for that time frame. But on the back of that, we might just be in this big long-term trading range. So
that wouldn't get us to new highs then.
That's right. So the objective, the price objective from the breakout is about 45.10. And it does seem pretty realistic. It's about 5% above current levels after Friday's big gain. And, we really have no signs of upside exhaustion now.
We have kept continually asked the question whether, and I refer to the leaders, the narrow advance as the generals and then the troops. We've said, do the generals come back down and leave the front lines and go back to the troops, or do the troops advance to the generals? You're saying that may be shifting and that we may see the troops start to catch up with it.
Right, the troops normally should kick in.
Really? Because normally that would be suspect if it was too narrow.
They are so relatively oversold. I mean, you see it on the sector front. You see it on the small versus large cap front. And I think there's going to be some appeal to that when we have confidence restored in the major indices from a broader perspective. Right. So with that breakout, that instills confidence. People go farther down the market cap spectrum, and that therein becomes a broader rally. So that's what we're looking for. We think it will be easier to take advantage of the uptrend in the next few months. And yet we'd also remain somewhat non-committal when we do start to see sell signals, of which there really aren't very many. Even among the mega caps, we don't have a lot of those DeMark indications of exhaustion. So once we see those, we're going to say, okay, you know what, it's probably time to pare back again.
So we may not go to new highs, but the probability of us testing the October lows, or some of the people on the street that are at 3,400 or 3,200, or my most bearish case is 3,000, we're getting less and less likely that those ever happen.
For sure. With any kind of breakout, it helps you ratchet these support levels higher.
And where are they now?
Well, now the former resistance, 4155, actually becomes proposed support, as does the rising 50-day moving average.
That's 15% from the October lows.
It is, yeah. So that's what happens with an uptrend.
All those people are going to be wrong. Katie.
Well, I hope not. It's not
Yeah,
fun. It's not
what do you
fun
mean
to be
you hope
wrong.
not? Yeah, no,
I just
you
know
hope
it's
so.
terrible.
We hope they are wrong.
No, I just don't like being wrong, so I feel their pain.
Wow, that's interesting. Bitcoin kind of was early, and now it's just doing nothing, kind of petered out, right?
You know, it's in pullback mode, but Bitcoin, as you know, had also broken out from a basing phase, and I think that was, in a way, an early indication of that sort of risk-on
Well, now it's
shift.
an early indication that this could peter out.
And, you know, the other thing to watch is the volatility index, or the VIX. The VIX broke down before we got the breakout in the S&P 500, and it looks like it might even break down again here below this support around 1540.